Hi, this is Kerry Artek with Wicked Stocks bringing you the daily SPY report for Tuesday, December 7th, 2021. Before I jump into the charts, as usual, just want to encourage you to please click like if you like the daily SPY report or any other content that Wicked Stocks uploads to its YouTube channel. Today, in fact, when I say today, I'm always a day in advance, as you're probably well aware. I did record this on Monday afternoon for the Tuesday markets after the SPY closes. But earlier on Monday, we did put out the video analysis on Apple Incorporated, Apple stock. That's worth taking a look at. And that's a good example of why you should subscribe to the Wicked Stocks YouTube channel. It will apprise you of notifications, not of just the daily SPY report when it's uploaded, but also at least one free stock pick a week that we put out every week. Now, premium members of Wicked Stocks who actually pay a monthly fee, only $25 a month, are provided also more private premium stock picks through the week. So anyway, enough of that. Let's jump to the charts for Tuesday, December 7th. We did push through that very short-term channel structure that today is at 459.72. I want to say that we spent the better part of 2 hours almost trading above that formation. It was 460.02 as I recall on Monday, and we pushed up into the 460, 60s and 70s and backed off for about an hour and a half, 2 hours before the market broke back in the afternoon and settled below this formation. And settlements are key for me anyway. When you're looking at a daily chart, daily bar charts have a sort of degree of finality in terms of how the day played out, and we closed below the 459.72 formation. So we're not in sell signal mode right now. The way I would characterize this market, though, is it does remain highly susceptible to falling back into the 440s perhaps within the week. We don't have a clear sell signal. It's fairly stair-step on the way down right now. But just take a look at the support and resistance levels for today. I've got 454.86 on the way down. It is in reach today below 459.72. It can contain intraday weakness. And breaking or opening below 454.86 would indicate 450.50 intraday. And that is a level that, because of its distance from where we are now, should be given the benefit of the doubt in terms of its ability to contain daily lows. 450.50 is nothing more than the low daily settlement price on this bar chart. I don't have it labeled properly. Maybe I'll squeeze that in there in the post editing. But 450.50 was the settlement price last Wednesday, and that's the lowest close so far since the move high was made a few weeks ago. 450.50 able to contain session weakness, and I think that's about it. And if we close below 450.50, we should tomorrow, I'd say Thursday by the close at the latest, actually test that 442.84 midterm support level, which you can see on the very same chart. This is a formation, as I've been saying. It's been an objective for about 2 weeks or so, a little less actually, when we settled below 460's channel bottom, which I'll show in a moment. It still is in fact in reach below 459.72, as I say. The 442.84 formation able to contain selling into January trade, and from there we can actually rotate back into the 470s, 480s within a month or two of that. Now, I will mention that if we do close below 442.84, and I think it's highly unlikely today, but you never know how the week may play out. We are below 459.72, and so long as we continue posting daily settlements below that very short-term channel structure, this market is susceptible to falling back into the 442.84 region, rising daily. Over the next 3 to 5 days, I still think is realistic given the still heightened volatility. And if we were to close below 442.84, then we should, under that kind of volatility, within a matter of 3 to 5 days or less, actually test long-term support at 428.32. And that structure goes back over a year, and it can absorb selling through Q1. And once tested, the SPY can rotate up and push on to new highs within several months. This is one visual representation of a bull market. Despite everything that's happened over the last couple of weeks and that we see happen every month or two where you get a meaningful downdraft, this market is still bullish, no two ways about it, above 428.32 by one measure. Let's take a look at the upside today, support and resistance. If we push or open today above 459.72, I do think 463.27 is likely, where we can top out initially, possibly back off to 459.72 again on an intraday basis. If we push through 463.27, 466.77 not out of the question today, which is that former channel bottom that we settled below almost 2 weeks ago, then setting off a sell signal into the 440s, which has yet to fully materialize, and may well this week, as I say, below 459.72. But we're not talking about 459.72. We're talking about 466.77 in the event that we happen to push or open today above 459.72, 463.27, a quick intraday target. And as the day wears on, if we push through 63.27, that's 466.77, former channel bottom, in reach today, where this market can place a daily high. And I think that that is about it. Now, we may back off there a day or two and fall back to 459.72. But honestly, if we close above 459.72, I do have a 3 to 5 day buy signal up to the 470.64 extreme channel top. I like that formation. It's consistent roughly with a series of highs that was put out several weeks ago. The high settlement price is 469.73, so forth and so on. And from there, from that area, let's say that we close today above 459.72, and by Friday's close, we test 470.64. Under that scenario, we could top out and rotate backward into later December. We could fall all the way back into the 440s, perhaps within 2 or 3 weeks. Now, in the interim, I will definitely be ascertaining the sell signals that may occur on the way down that would give you more reliability for that move. But just know that that is sort of the picture I'm kind of painting that I think is relatively realistic, that if we close above 459.72, 470.64, a 3 to 5 day target, able to contain buying through next week, and from there the market can fall off into later December. Yet, if we do close above 470.64, then we should yet again, once again, test that 480.12 long-term trend line on the daily chart that you can see here that has performed well really since the September highs in containing monthly highs. And it did so again about a month ago. Over the last few weeks, we've rallied to within 1% of it, and it would once again become, let's just say, a 1 to 2 week target at most, probably more like 1 week. If we were to close above 470.64 at the end of any day, that 480.12 long-term trend line becomes a 1 to 2 week objective where we can top out on a monthly basis. And that upper area is also a meaningful upside, longer-term bullish continuation area into Q2, for instance, over the next 3 to 5 months, if we were to close above it. I think that that kind of rounds it out. I'll leave you with the support and resistance for today. Just once again, we're honing in on 459.72, below which the market can fall off, possibly back into the 440s again by the end of next week or sooner. And if we close today above 459.72, then this recovery should continue into later week, the next 3 to 5 days in reach of 470.64, where we can top out through next week. And that is all I've got for Tuesday's Daily SPY Report. I will be back tomorrow around the same time with Wednesday's Daily SPY Report. You have a great evening.